space, well, it's been pretty tough in recent months, and few companies know this better than PVH, which you might recognize as the company behind Calvin Klein, Tommy Hilfiger, a host of smaller brands. Here's a stock that was nearly cut in half from its high of 120 last summer, down to a low of 64 just 2 months ago. Since bottoming in late January, though, PVH has been roaring higher, climbing 37% from its lows up to 87 today at the close. A remarkable move, although you could argue that the stock never should have maybe been that low. People got too negative. Now we need to ask ourselves if PVH can keep running. The company just reported after the close today, and they delivered a 6-cent earnings beat off of $1.46 with higher than expected revenue, 7% on constant currency basis. Numbers were even stronger than the company's bullish pre-announcement back in February 1st that would have ever led you to believe it. It is astonishing. And while management was cautious with their full-year guidance for 2016, because they have big international business, and they expect the super freaking strong dollar to take a huge bite out of their earnings, and that makes me think this stock could be terrific to own, especially if you believe, as I do, that maybe the dollar's even peaked and is poised to get weaker. So let's take a closer look with Manny Chirico. He's the chairman and CEO of PVH. Find out more about the quarter and his company's prospects. Mr. Chirico, welcome back to Mad Money.
Hi, Jim.
Nice to see you, Manny. Have a seat. All right, Manny, people are cheering the quarter after, and I think one of the reasons why you have to is this number for Calvin Klein is astounding. How could you do 21%? What are you doing?
Well, look, the brand is really performing exceedingly well. We have some tremendous marketing campaigns around the brand, and the product is just living up to it. It's being driven across the board, but underwear is leading the charge. Both men's underwear and women's intimate apparel is really driving the business.
Okay, so explain to me the success here, Manny, versus a category that people have clearly felt has become challenged. Mm-hmm. What does Calvin Klein have they don't have, or are you just in the right part of apparel versus for instance, Victoria's Secret had good under too, but these numbers, no one else has these numbers. I mean,
well, I think there's a couple of things going on. The apparel space for sure is being challenged, particularly here in the States. We have a much bigger international platform, and we're seeing very strong performance in China. We're seeing very strong performance throughout Europe in particular. And then our U.S. business just continues to grow in a really difficult environment, particularly in the fourth quarter of last year.
Right, right. Now, so Europe just got better, although I know you also changed your execution. You came on the show a couple times and said you were unhappy with the way that you yourself were distributing Calvin Klein in Europe. So you fixed that. Yeah,
sure. Right after the Warnaco acquisition, we took back the jeans and underwear business. We really turned that business inside out, not just around.
Right.
And we changed the distribution, changed the customer base, and really refocused the brand to bring it to its premium positioning. And it's really starting to pay off today.
All right, let's talk Hilfiger. I mean, you know, it's overshadowed by how great Calvin Klein's doing, but you still got some really good numbers. I saw that you decided to take in the remaining 55% stake in Tommy Hilfiger China for a joint venture. How big can Tommy be in China?
Well, to put it into perspective, the Calvin Klein business is about $275 million in China. Tommy is less than half of that. So, and we've been experiencing significant growth with both brands. Right. So I think there's a real opportunity to really take that business. I think both brands could be, in the next 5 years, over $500 million.
Really?
Yeah, each.
Well, that would be very, very
well, that market's growing. That consumer continues to spend. We're well positioned there. And both brands are really well received by the consumer in China.
Oh, well, okay, so you're bringing down debt, $300 million bought back. You're buying back stock, and you're expanding your square footage of company-owned stores. So how is it you haven't generated that much cash flow to be able to do all those things?
Well, sure. The model here for particularly Calvin and Tommy, but also our heritage businesses, are just very cash flow positive. Right. They don't require a tremendous amount of capital investment, except to build out stores, which usually have a payback of anywhere from a year to 2 years.
That fast?
That fast, particularly the company stores that you alluded to. Yes.
Even the fancy ones that you do?
Well, the fancy ones, those are our flagships.
Right.
There's not much of a payback on those. Those are marketing investments.
Can I read anything through to the department stores? Maybe some of them, I know Penny had a really good quarter, and you're very affiliated with Penny. I mean, that must be one of the standouts.
Yes, our Izod, Van Heusen business there continues to be very strong. Their business is very good. That mid-tier channel, the Kohl's business for us has been very strong as well.
Strong.
So we'll have to see how that all progresses. And look, in the U.S., the Calvin business at Macy's has just been phenomenal. It's really been driven both by the women's portion of that business as well as the men's portion.
Well, you're driving the bus then, because I felt that Macy's is not doing all that well. You must be the standout category right now.
Look, they're still the premier department store in America, and they are clearly dealing with some internal issues that they have to manage themselves.
Right.
But I think, with Terry Lundgren at the helm, they'll clearly put that back on track. And we've been a big part of their strategy, and they're a big part of our strategy.
All right, and raw costs all really good?
Say that again?
Raw costs?
Raw costs, raw costs are very good, as you see with commodities or what's going on. The challenge really for us in that area is the strengthening U.S. dollar, particularly on our foreign businesses.
All right, so we just have to talk one tough question. I mean, obviously, Brussels, and so business, I know some companies have had, shut down for a for a while, but when you have that terror attack, I mean, what does it mean? It's in terms of, you're a businessman, and you don't want to kill, human life, but you also have to deal with business. And what does it mean? Well,
first of all, Europe for us is our second largest region besides the United States. We've got very strong businesses in that part of the world. And I think you have to just realize that you're going to have to deal through volatility and uncertainty constantly. We
wouldn't have felt that a few years ago, man.
In what regard?
Well, I'm just saying that this a terrorist fact.
Oh, absolutely. Especially everything that's gone on. It's you have to build that into your business model. You have to be able to deal with the uncertainty. The resiliency of people around.
Things have gotten like that, huh? Between you and me in the time that I've known you. Yeah. Now you build it in. You sure did when I first met you.
No, the world is a changing landscape. And, look, the amazing thing is how resilient people are, how they just keep getting up. We were last time I was here, we were talking about Paris.
Right.
And to think now we're talking 3 months later about this is beyond me. But our teams there just keep moving it forward and try to, no one wants anyone to change the way we do business, to change the way we live our lives, and we're not going to allow it to happen.
I think that's a great point to leave it on. I want to congratulate you. This is a remarkable turn. I know that you always came on when it was tough, and now it's great. You deserve it. That's Manny Chirico, Chairman and CEO of PVH, with a terrific quarter. I thought conservative guidance, but that's the way you are. Mad Money's back after the break.
Thank you, Jim.
Yeah, thank you. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.